This session is sponsored by Commerce 7. Create better shopping experiences for your customers. And Tricor Braun Wine Pack, North America's largest packaging distributor.
Hi everyone, George Christie here with Wine Industry Network. Welcome to our final session of the day for our final conference of the year, the Bold Predictions. This session is titled The COVID Impact on Consumer Purchasing Behavior and What to Expect in 2021. It's going to be presented by Dale Stratton. Dale's an analyst with SipSource, and he's going to be joined by Christian Miller, who's the research director for Wine Market Council. Some really good information with regard to what's happening in the marketplace, how consumer behavior has changed, how routes to market have been impacted. So stay tuned. It's going to be great. But before we get started, I want to thank our sponsors for this session. We've got Commerce 7. Commerce 7 has been a great partner of ours. Thank you, Commerce 7, for your support, your sponsorship, and Tricor Braun Wine Pack. Tricor Braun has also been with us for many, many years, a great partner of ours. And again, we couldn't present this kind of information without the support of companies like Commerce 7 or Tricor Braun. Before I bring Dale and Christian to the virtual stage, just as a reminder, everyone, please take advantage of the chat feature. Submit those questions. Dale and Christian will be in the room. They'll be taking those questions on in real time. So please, we want to make this as interactive as possible. We want to make sure you get the most out of this as you can. So again, take advantage of the chat functions and get those questions in. I think that's it. Why don't we bring Christian and Dale to the virtual stage? Dale, Christian, it's good to see you guys.
How you doing?
George, how are you? Good to see you.
Very good. And once again, guys, thank you so much for taking the time to be part of this, our final conference of the year. I know how busy you guys are, but I know what you're going to present is, it's incredibly meaningful, and I know that, lots of people are looking forward to it. So thank you so much.
Great to be here. Looking forward to it.
All right. Well, I'll tell you what I'm going to do. I'm going to join the audience. I'm going to hand it off to you guys. I'll let you take it from here. Good luck.
Perfect.
Thanks.
Thank you, George, and thank you to the entire Wine Industry Network team. Excited to be here. I'm going to talk to you today about SipSource and use SipSource data to talk to you about what's happening in the marketplace. Wanted to real quick revisit what SipSource is. And simply put, SipSource is the best data set there is to measure your performance in the three-tier system. So SipSource data is aggregated depletion data from the distributors that you see there on the right-hand side of the screen. We're covering almost 330,000 accounts. This is vast. And you can see by the names of the distributors there that we really are capturing a significant data set. This group of distributors is going to continue to grow next year. The data is once attributed is given to VIP. VIP attributes that data so that we're able to look at different product classifications, sub-channels, and really break out and dig into the data. I would encourage all of you to visit SipSource.com to get an overview as to what this data is and how you can acquire it. The key takeaways and what I'm going to talk about today. First off, the wine and spirits categories are resilient. The categories continue to perform well and gain momentum in general. COVID has had a huge impact, and it's really hit the on-premise. However, what we have to keep in mind is that the consumer is going to decide when and how the on-premise reopens in large part. We'll look at some data that will explain what I mean by that. Not all products have been impacted equally, and that's really about the split between on and off premise. And this SipSource data gives us a great look into that, which we will in fact take a look at. We're starting to see some regional differences appear in how the on-premise is performing. That's something else that I think is going to be very important for all suppliers to think about going forward and how they approach their business. And it is important to understand that the on-premise is going to be impacted for the long term. It's going to be a long slog getting back to normal. How are wine and spirits performing? The data within SipSource is 12-month rolling numbers. So this is percent changes. And as you can see out there on the far right-hand side, this is data through October. Spirits are winning. Spirits are up 5%. Wine category, after moving into the positive in September, up 0.1%, has now gone back down to where it's into the negative at 0.2. That return to positive in September was the first time we saw positive trends in wine volume in over 2 years. So that's really important. We are seeing this improvement since COVID hit, but still not where we were 2-3 years ago. Very clearly, there was a bump in depletions as you look at that March time period. As you all plan your business going forward, it's going to be important that you remember that was there. That bump is going to be something that is going to be hard to overcome. So when we start looking at this data going forward, understanding that is going to matter in how you plan your business. What's performing? What's hot? And looking at this from a table wine standpoint. Sauvignon Blanc continues to do very well. Sauvignon Blanc depletions are growing 9.1%. That growth is really split quite evenly across price segments, and it's split very evenly between imports and domestic wine. We see over there that Pink Moscato, off a small base, is growing really nicely at 8.1%. I believe that's the intersection of pink and sweet coming together. Red blends and Cabernet growing, outperforming the category, but we see Chardonnay, a big category, still continuing to struggle, down 3.3%. Looking at the sparkling wine category, important point here on Champagne. In October, with October depletions, Champagne moved into the positive. Sparkling wines are very reliant on the on-premise business, and we've now seen Champagne, which went negative starting in March, has moved back into the positive. And talking to our distributor partners, what we hear is that November business was very strong for this category. So we're anticipating that growth rate to improve even further. Prosecco continues to perform very, very well. Going over to the other hand side, looking at the other categories within this, and you see some very big growth rates over here. It's important to remember that that entire bucket of product is only 7.5% of total depletion volume, but performance is strong. That 37.3% other growth, that's really driven by wine-based seltzers. We know that the seltzers category has taken consumers by storm, and there's really, really great performance there. As we see those new products and those wine-based specialty products come into that, we're going to see growth there. There is also a lot of wine-based pre-mixed cocktails coming into play. A couple of brands within that space are doing extremely well and selling very, very strongly. Vermouth is interesting. That to me is about the spirits category, and that 5.0 spirits category, martinis, Manhattans, vermouth is an ingredient in that, and we're seeing very good growth in the vermouth category. Now, I know that a lot of your portfolios are higher end. So this is taking a look at the performance of the various varietals for the $11 and over. And you see a bit of a different picture here. You see here that red blends are doing extremely well, 21.6%. You've got good growth on Moscato over there, 16.9 off a small base. Sparklings are doing well. Rosé at a high price is doing well. What I would tell you is that the red blend category, the rosé category, and the Moscato category, those are largely being driven by imported products. And we're seeing good growth there. The high-end Cabernet and Chardonnay, very big categories, but they're pulling that center of gravity down and are not performing as well within the category. Looking at price tiers in general and understanding what's happening with price tiers. You can see here the different price tiers, and we do break price tiers in SipSource out differently for table wine than we do for sparkling wine, as the price breaks within those categories are really quite different. So as we look at these price segments, And the question we're answering here really is about, is premiumization taking place? And what I would tell you is that in the table wine category, it's hard to see. And we see slight growth over there in the popular segment. So those are brands like Barefoot, Woodbridge, Sutter Home, those type of products. But then we see that super premium category, and that super premium category is really 11 to 15, getting good growth there. Over on the sparkling side, we see the higher price sparkling category is doing well. So in general, it would appear as though the sparkling category is premiumizing, but it would look as though on the table wine side, the jury's still out on whether we're getting an overall premiumization out of that. We talked briefly about on-premise. This really is puts some facts and some numbers around what's happening with the on-premise. This is for spirits and wine. On the left-hand side, you can see what's happening with the spirits category, and on the right-hand side, what's happening with wine. You can see here how badly hurt the on-premise has gotten. These are 12-month rolling numbers, but we see a very clear channel shift that the losses that came out of the on-premise have definitely gone into the growth rates that are occurring there at the retail side of things. This is continuing to get worse and worse. And we know that that's going to be the case as we go forward, watching how the on-premise performs. The top bar here represents, well, this is a split between the on and the off-premise, going back to December. The bottom darker box represents the on-premise. The upper box represents the off-premise, retail sales. And that number, that 14.8% that you see out there in December, January, and February, that's really solid numbers. Those numbers just don't really move very much. However, with the total shutdown of the on-premise that happened early, you can see that immediate drop where it went from 14.8% down to 14%. Down to 12.6 in April, where we're now down at the end of October, where on-premise is only accounting for 8.6% of all wine depletions. Going forward, as we project this out, I'm anticipating that we will see the on-premise category only represent about 7.5% of total depletions. So realistically, you're down to about half of where we were on the amount that is being done. Right now, as we're giving this presentation out here in California, we're back into a lockdown situation. COVID cases are rising. So we know that that's more likely going to be a little bit more difficult and could be a little bit worse before it gets better. I talked about how things are a little bit different between on and off premise, and that things might have been, in certain categories, might have been impacted differently. This gives you a view of what that can mean and how that looks. For the yellow bar represents the share of on-premise that these categories represent. The dark blue bar represents what they represent in off-premise. And you can see here that the sparkling category has a double share what it does in the on-premise than what it does in the off-premise. So the sparkling category was disproportionately hurt by the closing down of the on-premise. Same story is true for Pinot Noir. As you come down here and look at Pinot Noir, you can see that there's also a big differentiation there. Where for red blends, it's the opposite. For red blends, it's really that segment is very much driven by retail sales. So some of that growth that we're seeing in red blends is really coming from its natural reliance on the off-premise sales, where the sparkling wine category and Pinot Noir are getting hurt because of their reliance on the on-premise. Looking at regional views, and within SipSource, we have a regional view at this point that is broken out by the United States Census regions. So you have the West, the Midwest, the Northeast, and the South. And it'd be pretty much natural about what you would think those are. March and April, when COVID first hit, we saw a very, very even impact to those various regions. However, as we then moved into May and June, you started to see some differentiation. couple of big markets up in the Northeast were shut down earlier. And you see that big impact that that occurred in May and June for the Northeast. Meanwhile, the South was actually declining less and doing better. July and August, we saw more moderation, that coming more into balance. But even then, we did see the southern United States not getting hurt as badly as the other regions. September, October, same story. Back coming more into balance where that impact was there, but the South was impacted less than the others. And these bars all represent the change in the previous, in the current time period to the previous. So it is a cumulative, if you will. Net of it is by the time you get out here to October, you can see that there's a 10-point difference in trend between the South, down 35.3%, and the Northeast, which is down 45.6%. As we head into lockdown, coming into this with COVID cases rising, my anticipation would be for the November-December period, we may see things go back to look more like that May-June period. We'll be tracking that, and we'll certainly report out on it. When I spoke about the consumer will decide what happens in on-premise, this is data from Civic Science, a company that we use and have a contract with over at the Wine Market Council. And the question that they ask of them, and they do online surveys, the question is simply, how soon would you be comfortable dining out in a restaurant? And you can see here, you can see that they're broken into under 3 weeks, 1 to 4 months, or over a 4-month period. And you can see that early days, there was a lot of uncertainty as to what was going to happen. Really, not many people were thinking about what this was going to look like, I think, in the long term. But you saw that start to balance out, people thinking that this was going to get over. And you saw where, 42% of the people that were out there said that, it'll be under 3 weeks before I'm comfortable doing that. Then we had that first wave of COVID hit. And now all at once you saw over 4 months really increase. And that jumped up to where more than half of the population, of the adult population, was saying that it's going to be more than 4 months before I'm willing to go out. Then it was just kind of a battle between those two, whether it's going to be under 3 weeks or over 4 months. But now as we come out here and we see that second wave hit, you can see that we're starting to see people being pushed out a little bit further on when they're going to be comfortable going out. I do think that we see that 1 to 4 area, which was in decline and flattened out, seen a little bit of an uptick there. I think some of that might be due to the fact that the vaccine has been announced, and people do have some confidence that they will be able to be changing their lives and getting back to somewhat of a normal situation. The on-premise, and this is data from VIP, and VIP keeps track of all of the accounts that depletions go into. And this is looking at the on-premise, and this is the change on outlets for the on-premise, and these are wine licensed outlets starting in January, and from January to September of 2020, what has occurred within the on-premise. And what that shows here is that 22.9% fewer accounts are open right now. So there are a total of 59,000 on-premise accounts that are licensed to sell wine that have not ordered a product in that 28 days or more. Really driven by restaurants, and restaurants are the lion's share of this, but you can see that every segment of this has been impacted. To note, the off-premise is down 5,000 accounts. But as we look at this, a loss of 22.9% of the accounts is a struggle. And that's going to be very, very difficult to overcome. It's going to be a long, hard slog for this business to come back. Some of these accounts will certainly reopen either under current ownership or new ownership, but it's going to be a long time before we get back to where we were. In closing, just some future thoughts. Where do we think the business is going, and what do we think is going to happen? Looking forward, it's difficult for me to believe that the wine category is going to be able to generate any significant growth in depletions. I'm predicting that volume is probably going to vacillate here somewhere between down a half a point to up a half a point. We're going to continue in the wine business to lose share to spirits. Spirits are winning the battle. They're doing very, very well. We're 6 to 9 months away, and I think I'm probably being optimistic there before we get back to what some people are referring to as the next normal or what this looks like. But we've got a ways to go here before we're back to doing business as usual. Local actions are really going to drive those regional differences, and keeping an ear to the ground in what's happening in those various regions is going to be important. And how you allocate resources, what do you do with your product? So I think having an ear to the ground in various states and understanding what those local regulations are and how those move quickly is going to be important. Many things have changed under COVID, and I think there's a number of things that are here to stay. First one I would talk about is restaurant takeout. Great ramp up in restaurant takeout and is certainly helping keep a lot of restaurants afloat. That's going to stay. I believe that will continue to be a big channel and will grow. That's going to lead to some changes, though, in the on-premise, and especially in drinks programs. I just don't believe that you're going to be able to order any cocktail that you want. You're probably going to see more limited selection within that, but that's something that restaurants are going to have to adapt to, and as we call on them, we're going to have to understand what that means to them. Single serve to go packaging is ramping up. There's been legislation around that. Certainly for the on-premise to be able to sell cocktails to go, wine to go, that's likely going to stay. There's going to be some version of that that's going to stay. That's also going to be something different. And we're seeing very good growth in wine cans and other packaging, and I do believe those are going to continue. The digital acquisition of products, both on-premise and off-premise, has grown dramatically. The idea that COVID really did accentuate and probably drove a year, 2 years worth of development in the digital acquisition space is true. E-commerce is exploding, and that's not going to change. To me, that doesn't mean that brick and mortar is dead. Brick and mortar is still going to be there. It's still going to do well. The consumer will use both channels, but there will be an increase in the digital acquisition and e-commerce. I think there's could be a reduction in indoor seating capacity. Some of that might be legislative, and some of that might be by choice of restaurants, but that's something that will also be a bit of a headwind. And then, as I talked about up there in the takeout portion, in general, you're going to see on-premise outlets come to reduced selections. They're going to have reduced beverage programs. They're likely going to have reduced menus. They're under a cash flow crunch. So how they spend their money is going to be very, very important. I think that means a lower selection all the way across the board. And that means that we're all, be it supplier, distributor, we're going to have to adjust to that and determine what that looks like and how we allocate the products that we do sell. With that, I'd like to say thank you. Happy holidays to everybody. And with that, I'm going to pass it over to Christian Miller to talk to you about the Wine Market Council data.
Thanks, Dale. That's very interesting to see the data from the depletions point of view. It's about as wide a vision of the wine market out in the three-tier system as we're going to get. Hello to everyone. Thanks for listening. I'm Christian Miller. I'm the research director for the Wine Market Council, as well as proprietor of Full Glass Research. And I'm going to be taking a look at the consumer perspective on both current trends and the outlook for 2021. The information here is based on multiple sources, primarily market research, which we've done at the Wine Market Council in conjunction with Nielsen, ORC, and Civic Science. And I should note that the Wine Market Council research is available in detail to all the members, who include importers, regional organizations, distributors, retails, wineries, and vineyard owners and growers. And membership in the Wine Market Council brings you access to all the data down to the actual individual numbers, things like crosstabs, access to webinars that we deliver on various topics, usually research-based, as well as the complete reports themselves on each topic. So with that, I'm going to take a quick look. Let's just quickly review a snapshot of overall wine sales situation to kind of put ourselves in perspective here. As everyone's probably well aware, off-premise retail sales have increased considerably over the previous year, as well as direct-to-consumer shipments outside of tasting rooms. Important to note that. Wine shipments into distribution, on the other hand, have lagged. They experienced a huge drop in April as everyone kind of froze with the first wave of the COVID pandemic. They've slowly been closing the gap from July onwards. So I expect at some point inventories will force that to completely catch up. Off-premise retail volume increases peaked, as everyone probably knows, in April and May with the massive pantry stocking episode. They trailed off in summer, and they've since stabilized at around 10 to 13%. Direct-to-consumer is a little bit more interesting. We'll go into that a bit more detail. They peaked in April and May, but they maintained a higher growth rate into the summer and then declined to October, but may be bouncing back now. Wholesale depletions, you've already seen data presented from Dale on that. And the average price per 750 ml bottle in off-premise retail continued its long upward trend, as well as average price for direct-to-consumer shipments, in contrary, started dropping in May and through the summer, basically due to new people coming into the category who weren't, spending for the top of the line stuff. Reversed in August, they're still 10% below the previous year. Now, you've probably heard numbers like consumer spending on wine dropped 3.5 billion, 5 billion, whatever the number may be quoted. And I want to urge a little bit of caution there. What does that actually mean? It may not mean what the casual reader thinks it means. And to figure that out, I'm just going to build a little model here of on-premise versus off-premise consumption. And if you look over here, we're assuming, let's just assume a model of 100 cases in this market, all one wine, and that wine retails for $60 on-premise and $18 off-premise with the resulting case prices. Well, what is consumer spending on wine at the consumer level? It's really the same as the retail tier's revenue on and off premise. So you're looking at these kind of numbers, 14,400 from this on premise, the 20 cases on premise, $17,280 realized in consumer spending or retailer revenue from the 80 cases off premise. And then this flows back. But here's where things get a little bit tricky in terms of impact. What you see here is that we've got much higher margins in the sale of wine on premise than you do in the sale of wine off premise. And so you find that translates to wholesaler revenue of only $3,600 at typical markups from the on-premise channel and $11,520 from the off-premise channel. And then things flow through fairly evenly back to the winery in terms of the winery's revenues. Okay, now COVID rolls along. What happens? You have a massive shift to off-premise. In this model, I've assumed 95 cases off-premise, 5 cases on-premise. Well, now if you do the math and work back through it, what you see is a considerable drop, almost a third in retailer level tier revenue, in other words, consumer spending, but really only modest drops at the wholesale and winery revenue level. So really the retail tier impact is the big one, and that's large in local economies. Working back through the distributor tier, it's much smaller and again, fairly localized. When you get to the winery tier, that's affecting wine production reasons, but it's still less of an impact as long as overall sales are maintained, which is more or less what's happened, as you've seen from Dale's presentation. So what happened to those dollars that consumers save from restaurants? Well, those of you, mental accounting is what I'm going to talk about. Those of you who are familiar with Richard Thaler, the Nobel Prize winning economist specializing in behavioral economics, probably heard mental accounting. And the question is, what happens to those dollars? Do consumers actually switch them? Do they consider it, oh, I've saved all this money on wine in restaurants and now I'm going to spend it on wine at home? I'm frankly skeptical that consumers directly switch those dollars. There are really very few occasions where people say, should we drink wine out tonight or should we drink wine at home? Usually it's, shall we go out or dine at home? Then wherever you are, the drink is chosen, and it may not even be wine, especially in certain types of on-premise situations. And not only that, but your wine costs are subsumed in the restaurant bill. So when the credit card invoice shows up, you're not looking at restaurants wine versus grocery wine versus wine store wine. You're just looking at stores totals versus restaurant totals. So there may be a relationship, but it's quite convoluted. So what does that 3.5 billion really mean? That consumers are trading down? No. That consumers are less interested in wine? No. That consumers will spend the same or more on wine with the money saved? Not necessarily, unless the increase in retail sales outweighs both volume and markups on premise. Now we're going to turn to some survey data. This is through Civic Science. It was a sample of 1,024. And we're asking what describes your attitude towards the holidays this year. And this includes both adults in general, and I've broken out high frequency wine drinkers among them. And what you can see is the general outlook is frankly pretty gloomy this year. Only 36 to 38%, depending on who you're looking at, are going to stick with a small number of close family and friends. That implies a moderate amount of off-premise purchasing, but perhaps less than the previous year. A third of high-frequency wine drinkers just say, I'm not feeling celebratory this year, which is an ominous omen for champagne and perhaps other high-end wines. We'll see a little more about that in a moment. And they're actually less celebratory even than adults at large. And rather shockingly, only 9% of high-frequency wine drinkers say, I'm looking forward to delicious food and drink as their main attitude looking towards the holidays. So, impacts. How and where are wine consumers shopping right now? Well, one of the things we asked of on the Civic Science online platform was, if you purchase wine from retail stores, how have you changed your shopping habits since the pandemic began? And here I've broken out high frequency wine drinkers in beige color and dark blue for all other wine drinkers, less frequent wine drinkers. High frequency is defined as more often than once a week. So we're really talking sort of the core drivers of the category here. And you'll see that spending less time in the wine section is agreed to by a considerable number of them, especially the other wine drinkers, where nearly half of them are spending less time in the wine section. A number of people have turned to what you might call bricks and clicks, that is going to restaurant websites, ordering what they want and then picking it up. And you see that more prevalent among high frequency wine drinkers. They're twice as likely as other wine drinkers. Other wine drinkers and high frequency wine drinkers, about a fifth of them have switched to delivery over picking up wine in stores or shopping in stores. A fifth of the high frequency wine drinkers and nearly as many other wine drinkers are basically engaged in little or no advice or discussion. And that has clear implications for new or emerging regions or new brands or wines people haven't tried before, where the hand sell was an important factor. And finally, a substantial number of people are just grabbing things off displays instead of even shopping the wine section at all. Let's take a look at what's happened online, however, and this is very interesting. Thanks to Nielsen for providing some of this data. And what we're looking at here is from 2018 through 2019, all the way up to September 2020, we're looking at e-commerce wine sales in terms of dollars and the estimated number of buyers in e-commerce. Now, this e-commerce particular measure is primarily retail three-tier system. So you're looking at both, virtual retail, and you're looking at bricks and clicks here. And you can see, just as you'd expect, this enormous spike for pantry stocking right here around April 20th and May 20th, followed by a receding. And we saw this echoed in the wholesale data that Dale showed earlier. But now let's take a look at direct-to-consumer shipments from wineries. And this is based on the Sovos ship compliant data. And that shows a similar pattern with a twist at the end. It was up 12% in 2018. It was declined a little bit, but still up 7% in 2019 over 2018. And then you look at 2019, and it was actually rather weak to kick off the year versus the previous year in January and February. But you did see this famous surge in pantry stocking, up 18% versus the previous year. But it has gone on to actually have a higher average increase versus the previous year, June through September, which to me indicates that it is achieving a somewhat higher base in terms of the number of people and their spending directly at wineries. And it's also a very good sign for wineries that perhaps they've managed to get some traction with their websites. In the early phase right here, our research indicated that a lot of this business was being picked up by bricks and clicks and virtual retailers. Now, perhaps the wineries are engaging a little bit more, a little bit bigger share of that, the on-premise channel. So we asked people, well, thinking about the upcoming holiday season, where do you think you'll be purchasing most of your wine this year? And they could check any mixture of these. And what you see is still from a retail store in person, and that's the dominant mode of shopping. And indeed, other indicators have shown that people are getting more comfortable. They've worked out routines for shopping in stores by be it timing or speed of doing it or things like that. However, there's a wide, substantial number of people who are going to use other methods, from a retail store using the store website, from a retail store using the delivery app, from an online retailer with no store at all. And this ranges from, roughly 4 to 8% of the wine drinkers. And then you have another 4% who are expecting scheduled shipments from the wine clubs, and 15% undecided at this point. Now, because you could check more than one option here, it's important to note that 13% was the total of people checking at least one of those four online or remote options for purchasing. So that's roughly the size of your potential audience this holiday for pure online sales. If you purchased a wine from a restaurant in the past month, how did you buy and consume it? Well, first of all, a lot of people did not in the past month. Now, this was asked in early November. So essentially, people were talking about what they did in October. We're going to have to presume that with a new pandemic spike, did not purchase is going to get even higher. But it's kind of amazing when you think about it for wine drinkers that few, or for US adults as a whole, that few people actually even supported on-premise at all in the past month. Then you have another quarter of them purchased food to go, but they didn't buy wine from the restaurant. And then you have, an assortment of smaller numbers who actually purchased wine at a restaurant. And by far the largest one of them is at nearly 8%. I drank a wine by the glass at the restaurant. So these bottom two are people who are still actually going to patronizing restaurants in October and purchasing wine there. But what you see is that in some other method of purchasing and delivering with the food or taking it home with the food is very modest. And in fact, another poll by Civic Science asked people if they were more or less likely to order from restaurants if the alcoholic beverages were also available to go. And it really made no difference for 3/4 of them. And somewhat more likely, than less likely, 15% to 10%. But really, the gist of this is that wine sold from restaurants to go is not at all a panacea for the current on-premise situation. Now let's take a closer look at what people are drinking or what they tell us they are drinking. And we're going to again turn to civic science, in this case, 2,331 unweighed responses. And what we see here is when we ask, thinking of the upcoming holidays, do you think you'll be serving and drinking more, less, or about the same of each of the following drinks for a variety of categories of wine, as well as beer, spirits, and hard seltzer. And what you see here is in the far right column, of course, this includes people who don't drink those particular categories or don't drink alcohol at all. So that's going to be the largest column. But as usual, when you ask these types of questions, about the same is the answer for the majority of people who are drinking in these categories. And this is typical of surveys going back several years. And when you look at more versus less, you see on balance, just with moderate statistical significance, a tendency towards more over less, but it really is fairly modest. Curiously enough, beer and spirits have a higher margin of more minus less than does the wine category. And hard seltzer, with its enormous growth, came out flat. Perhaps it doesn't click with people in terms of an item that's associated with the holidays, or that perhaps it's a factor if there's a lot less sort of large scale socializing, which might drive that particular category. Thinking of the upcoming holidays, in which of the following ways do you plan to consume wine differently from the usual holidays? And we asked this of US wine drinkers. And what we see is a variety of responses to this. First of all, about a little more than a third of people says, I'm not really changing in any of these particular ways. But almost a quarter of the people down here said they're not planning to attend celebrations where wine is being served. So really a quarter of people are essentially planning on holding up for the holidays. And these are wine drinkers. So their wine consumption is going to be driven by the queues at home, what they have in inventory at home, what they can get from delivery or off premise. 12% are going to purchase some special bottles for celebrating. And 8% say they're going to open some special bottles they've been saving. So there is some tendency to treat themselves. On the other, and only 9% says I'm planning on purchasing less wine because fewer people are coming to it. So in that sense, it's relatively good news for the off-premise people still, in terms of there is certainly going to be people treating themselves, and only a few people plan on purchasing less wine per se, despite the fact that the groups are going to be smaller. But on-premise, still not very positive news at all. Looking ahead, how soon will people be comfortable doing all these various things? And this was run in late October, early November. So it's looking towards Thanksgiving as well as Christmas in terms of the near future. And what you see is similar to what Dale showed, is that you see a large number of people who are willing to go back to work, for starters, shop in stores and eat out in restaurants now. And then another large group who don't plan to do it for 6 months, and everything in between is quite small. And rather ominously for the on-premise, you see right here, 47% are willing to do it now, but over a third don't think they'll do it for another 6 months. Going on vacation and traveling right over here, half of the people don't anticipate doing that for 6 months, or at least they didn't in the start of November, and attending large public events. So this indicates that the tasting room wine country visitation platform for business of wineries is really a long way from recovering. I should add that wine drinkers are actually more cautious, and we've seen this in other questions too, more cautious than the public at large. And this number, eating out at restaurants, was actually just over a third for wine drinkers, about even with those who anticipate waiting for another 6 months. Some economic indicators. I know Professor Eiler is going to talk about this in detail, but things to keep in mind when thinking about consumers per se. Unemployment, of course, there's been massive unemployment. but it's actually been skewed somewhat away from the demographics that typically provide wine consumers. So, for instance, there are minor job losses in logistics and construction, moderate to medium losses in professional business and retail trade, with the retail trade recovering faster, but both of them recovered. On the other hand, leisure hospitality workers were just crushed, with 8 million unemployed initially, and it's recovered only to 4.5, and it's stalling now, of course. Also, the highest earning 25% of the workforce has almost recovered employment levels to pre-recession levels, and that's where a lot of the wine demand comes from. Household finances, struggling again. A third of the adults are having problems paying expenses, but again, that is household wine drinkers in households, or wine drinking households, skew a little bit somewhat lower for that. The 538 runs a monthly economist poll, and this is through October. It coalesced around late 2021 to early 2022 for when they expect a full recovery, and that's about half of them. 40% think it'll take longer, and only 9% think it's going to be sooner. So the outlook from economists is really this dragging on for quite a bit longer, until the middle of next year. On the other hand, there are a couple of things in the recovery's favor. First of all, household and corporate debt are lower than 2008. Net savings is much higher. It's possible, especially when you consider people wanting to travel again or go out to restaurants or treat themselves, it's possible that for the wine industry, a post-vaccination recovery could be very fast and even include sort of a spike as people treat themselves initially. This is the Civic Science HPS Economic Sentiment Index. It's composed of 5 different components. Expectations for housing prices, expectations for purchasing a major item, and expectations for the economy overall, as well as job prospects. And you can see here that 50 is sort of a neutral position, and it was actually fairly positive through early 2020, and then it plunges with the COVID right here in April and May. It starts to recover slowly, and it actually had recovered to slightly positive, or slightly over neutral, I should say, by September, and now it's plunging again. And the expectations at Civic Science is that this is going to show further downtrend for a while. So the economic sentiment in terms of consumers' outlook is decidedly negative at this point. So let's talk about consumers and wine. And first, we're going to stop by the people who don't drink wine, or don't drink wine very often at all, but do drink alcohol. And why don't they drink wine more often or at all? Well, this is, we asked this survey. We've got a survey on health, wellness, and ingredients and attributes of wine that we just finished fielding with Nielsen's home scan panel. And these are some of the early results. So what he asked these people, why don't you drink wine more often, or why don't you drink wine at all? And you can select up to 3 reasons. And you can see really the dominant reason, and this has shown up in other surveys as well over the past couple of years, is that they don't like the taste, or they think they won't like the taste. And some of the other reasons that people sort of agonized over, oh, it's not, it's not in style, it's not exciting, it's not interesting, don't really show up. You do have some fair number of cases where people say they physically don't like it, or medical conditions, et cetera. Those are significant, but still, really minority reasons. And the difficulty of making a choice, which overlaps with a number of these others, is also significant. In this same survey, we asked if people were drinking more, less, or about the same amount of various beverages as they were a couple of years ago. And what you see here is that less, as usual, the largest number of people, 53% in general, 54% for wine, say they're drinking about the same as they were a couple of years ago. However, uniformly across the category, what you're seeing is more people saying less than more. Now, there's a caveat here. This is a household panel sample. And because they're sampling heads of households or main purchasers of households or as the basis here, what you see is that younger consumers and people in sort of roommate situations and things like that tend to be underrepresented. And what we've seen in other surveys is younger consumers and high frequency wine consumers are more likely to be the reverse, more of them increasing their consumption than less. So this is probably a bit gloomier than it should be, but it is something of a warning sign. So these people were asked why they're drinking less wine than they were a couple of years ago. And first of all, the vast majority of these people who are reducing their wine consumption are also drinking less alcohol in general. And so when they were asked about wine specifically, they said 50% of them said, well, it's because I'm the same reason I'm drinking less alcohol in general. And you can see that if you redistribute those, I should note here that wellness-related reasons were 33% and health-related reasons were 15% in a January survey of a very similar type that we ran. And what you see is the wellness and health factors have actually dropped quite a bit, and sort of COVID or situational factors or general aversion to alcohol have actually increased somewhat. But let's take a look at this. People who say, same reason I'm drinking less alcohol in general, and kind of redistribute them. And what you see is the primary reason is less social events. So just as the top reason for wine specifically, 26% said, I don't find myself in wine drinking occasions as often. 43% of those people reducing alcohol in general said they're in less social occasions where they might drink alcohol. So this is where you see the COVID impact here on people, whether they're reducing or not. It's clear there are fewer sort of alcohol cued situations or social occasions. On the other hand, 20% of them said that alcohol makes them feel bad. And this is very similar to the 21% who said that about wine. Another quarter said it doesn't fit in my current diet or modes of eating, and whereas only 12% of people said that about wine versus other alcoholic beverages. And then finally, 36% sort of nebulously said, I'm just not enjoying it as much. So the gist of it is that there are some unique, few unique features about wine in particular, but generally cutting back on wine is driven by the same impulses that are causing cutting back in alcohol in general among the segment of people who are doing that. And there is a big COVID section, I should say, of people who are basically in fewer social situations where they would normally drink. In the same study, we asked people if they participated or planned to participate in Dry Month in 2020. And here we have the results for this. 87% had not, and a total of 20, this was asked, I should mention this was asked in October into early November. So there was still some time left in the rest of the year. 5% of the people said they were planning to during October and December. Well, given that's the holiday months, we can take that with a grain of salt. But 13% had already participated in that. And these are only alcoholic beverage consumers. So that's a fairly substantial number, taking them at least a month off. We also asked, what are their plans for dry months in 2021? And you see about half of them said they don't plan at all. Although a further 9% said they were probably going to moderate their drinking. 9% say they're going to participate in a dry month and not drink at all during the month. And another 4% said they'll participate, but just reduce the amount of their drinking. And then 30% none of the above. So you come to a 22% number of people who express the interest in or intention to engage in dry month to some extent, which is a considerable increase over the group who actually did in 2020. Now, that's just intentions. We don't know if they'll follow through, but it does represent increased interest in the concept. Which brings us to the whole questions of health, wellness, and wine, and we'll share some of the most recent data from our survey on that. First of all, we asked, how well do various categories fit in with a wellness lifestyle? And we see, interestingly enough here, the answer options were completely fits, somewhat fits, barely fits, does not fit at all, or not applicable. And the not applicable people are substantial. They're basically people who have no idea or don't, have no interest in drinking or alcohol anyway, so they just clicked NA. But what you see here is, in general, wine is perceived by people to fit in with a wellness lifestyle in the generic sense at a much higher rate than any of these other categories, even hard seltzer. And then a much smaller number of people say it does not fit at all, whereas it's over a third for all these other categories. So in a general way, that's very positive news for wine in terms of weathering a wellness storm, so to speak. We also asked which of the following features in a wine would make you much more likely to purchase it, this time using the Civic Science platform. And they could check as many of these as they liked. First of all, 32%, and that works out to about 2/3 of the wine drinkers in the study, said none of the above would make me more likely. So the majority of people really don't look to these kind of health-related or ingredient-related or attribute features, health, wellness attributes. The majority of wine drinkers don't look to those as reasons to purchase wine. The highest number of people of interest in terms of purchase motivation actually came with no sulfites added, and with all the hoopla about low carbs, half the calories, low sugar, lower alcohol, etc., we've kind of lost track of the fact that the sulfites, probably driven by the warning statements that everyone sees on the back of the label still, sulfites are actually still the number one item in terms of concern as an ingredient. There was very high overlap, too, with people who wanted to see ingredients listed for wine and people who were concerned about sulfites. And in fact, when you look at a lot of these various attributes, they're often bundled together. So this is not cumulative with 3% saying this and now 6% and then another 8% saying that. There's very high overlap over most of these factors. We asked in a little bit more detail in Nielsen, a bit more detail than the Civic Science, in terms of breaking down the categories. We asked people about, what types of alcohol beverages would you associate with each of these statements? And we included calories and carbs and sugar in there and alcohol. And then we also included more general statements like it's a good option when dieting or watching what I eat, or it's healthier than most alcoholic beverages. And what's really interesting here is that in terms of checking the ingredient or attribute boxes, hard seltzer is the key clear winner here, with a much higher proportion of people than the other categories saying that, yes, I associate hard seltzer with low carb, low calorie, sugar, et cetera. But when it comes to sort of a generic feeling that it fits in with a healthier wellness lifestyle, wine actually still comes out on top as being, as being healthier than most alcoholic beverages and a good option when dieting or watching what I eat. Hard cider fans, just a quick note, if you're considering production of hard cider, you're doing so. These are very low primarily because the number of people who have experienced or shop or buy or consume hard cider are very low. If there was on a similar, if you indexed it to wine spirits levels, then you'd find these numbers about 3 or 4 times higher. So, of course, none of these is the predominant answer because most alcoholic beverage consumers don't really associate alcoholic beverages per se with health features. But within the sort of wellness realm, you can see that wine does better generically, whereas hard seltzer does better in terms of checking the boxes. So what do we think overall? Well, overall conclusions to me include that the changes in shopping behavior have been dramatic, but fairly minor in terms of what people are buying. A lot of the trends that we saw in 2019 in terms of favored varieties, package sizes, trading up, et cetera, have continued on into 2020, COVID or not. Wine consumer sentiment is definitely very depressed, even though expected purchases are flat to slightly up. Decrease in consumer spending is really an artifact of channel shift with mainly local economic impact. Online purchasing is still a minority of behavior, but with diverse expressions and channels ranging from bricks and clicks to wine clubs to purchasing directly from winery websites. It spiked in mid-2020, but it seems to be stabilizing at a much larger base than in previous years. And I expect year-on-year growth to hold steady well into 2021, possibly even accelerate a bit. The on-premise outlook from the consumer side, just as like from Dale's wholesale side, is bad. And wine to go is of very limited help. It's not a panacea at all, as I said. The household panel survey, which attention again tilts older and doesn't include a certain number of segments of younger consumers very well, but it does suggest a net decrease in self-reported wine consumption, mostly for the same reasons overall alcohol. And other research indicates this skews towards older and less frequent wine consumers. So you might see high-frequency wine consumers still driving growth. In fact, driving growth even more in 2021 than previously. And lack of socializing is, of course, the major new impact. Expect a moderate increase in dry months. But the biggest barrier by far to newer marginal consumers is perceived flavor. They think they won't like wine, or they've tried wine a few times and they don't like it. So matching people's palates, the type of wine, the style of wine, we know it's very diverse with all kinds of flavors. Matching it to people's palates so they try the right wine is very, very important for growth. Finally, health concerns and wellness interest are definitely up among alcohol categories. We saw wine does better in overall image, even though it doesn't have quite the same attributes in its favor that some of the other categories do. And ingredients attributes are impactful for a modest minority, but sulfites actually lead that list. So it's kind of time to revisit what is the real impact of sulfites and what will its impact be on, as people move to ingredient labeling for featuring the attributes. And with that, I'll turn it back to George to moderate the rest of the conversation. Thank you again.
Thank you, Dale. Thank you, Christian, for your support and for your time. That was a terrific presentation and some really solid information. I want to thank our sponsors for this session. Again, Commerce 7 and Stryker Braun Wine Pack. Thank you for your support, for your partnership. And we couldn't do this without you. We couldn't offer this to our industry for free without your support. Now, for those of you in the audience, stay tuned. We've got a little bonus segment here, some bold predictions from some notable people in the wine industry. I think you're going to enjoy this. Thanks again for your time. Happy holidays, and enjoy this last segment.
Bold prediction, truly a bold prediction. Look, this Black Swan event was brutal for our industry, but it had one veneer of hope, is that the internet is finally awoken for us to sell wine online. Consumers are leaning that way, and I can promise you, many of your peers are leaning into the channel. If you're not spending money on tomorrow, if you're not spending money on the future, you're missing out, you're falling behind, and it will lead you to digital Darwinism, which makes this extinction level event even more dangerous. I hope you will put money in and not accept passive sales from the internet, but active sales with you reaching out. A few examples. You look, wineries that were prepared for the internet when COVID hit had great success, whether that was Wente with Justin Nolan or whether that was Trinchero. That infrastructure was meant to move forward. We need more of that digital learning and reaching outside of the industry to use those expertise. I would never hire my tasting room manager to make my wine. I would never hire my winemaker to run my club. Let's hire professionals from the digital outside so that we can lean forward.
Hello, wine industry. This is Jeff Bitter, the president of Allied Grape Growers, and I've been asked to give my bold prediction as part of Wine Industry Network's Bold Predictions conference this year. So in order to do that, I'm going to put up a couple of slides and share with you what we think those bold predictions are. One is that the 2020 wine grape crop will total near 3.35 million tons. And another is that coastal wine grape markets probably won't return to what we consider normal until 2023 or even 2024. So let's first tackle the short 2020 crop. We think yields were off 10 to 15% statewide, and although some areas like the coast and Lodi were off more than other areas like the Central Valley, we do believe overall we could have seen a 400 to 600,000 ton reduction just from yields alone. And then on top of that, we add in the 240,000 to possibly 325,000 tons that we believe could have been either rejected or refused by buyers because of smoke exposure this year. And totaling that up, we could see a range of 3.2 to 3.5 million tons crushed, which, taking the middle of that range, is the 3.35 number. It would be the shortest crush we've seen in California of wine grapes since 2011. The next bold prediction is that the coastal wine grape markets won't return to normal until 2023 or 2024. And this is really predicated on the fact that we have a lot of acreage of wine grapes that is not yet bearing, that just started coming into bearing status this past harvest, and really won't hit full stride until 2022 and beyond. And so there's a lot of pending new production online. And then with the pullouts that we've had and what we're anticipating, we believe that it's going to be probably the 2022 or 2023 crush before we get our bearing acreage down into the target range of 540 to 560,000 acres. Now that target range is predicated on demand being flat, which is actually what we've seen for a number of years now, even in the midst of a pandemic here. While some wine grape shipments are increasing from some areas, others are not. And so overall, our overall demand does not seem to be changing significantly today. And if that's the case, as we move forward, we remain structurally oversupplied, particularly in the coast and probably through the 2022 harvest. So those are our bold predictions. We wish you a Merry Christmas and a very safe holiday season. Thank you.
Thank you for this opportunity to speak about the current state of business and also offer guidance to our wine community for 2021. In speaking with our Senior Vice President of States Group, Maren Bloomquist, with Republic National Distributing Company in California, he provided great insight and leadership into how wine suppliers do need to strategize and pivot towards the future. To succeed in the wine business in 2021, the need for wineries to be flexible and change their perspective on who their consumer is and channel of business their wine is being sold in is going to be essential. The wineries that made immediate changes in 2020, especially during March and April, have had a pretty good year. Some probably have had a better year than they would have without COVID. They sold more wine often with less financial support needed than they would have made in the non-COVID era. Those who waited have often had a challenging 2020 because buyers are busy. Hard to access space in many retailers is actually decreasing to accommodate essential goods, and buyers made quick decisions on new items and have made less decisions than they would have had in a normal year because of the challenges in meeting face-to-face and the ability to change their store sets and footprint with labor shortages. Maren's feedback, and I completely agree with him, don't wait, be flexible, listen to powerful buyers, listen to intelligent people at your distributor, and take their advice where wine is being sold. Whether it's online platform or chains, every state in the US is going to be different. You have to leave your old prejudices behind when it comes to certain accounts, Club Channel as an example, in order to access your consumer that may have not historically even shopped at those channels are doing it now. And your old consumer that was drinking your wine in high-end restaurants is now buying lobsters and caviar in the Club Channel, and your wine needs to be there too. And if not, they will buy someone else's. Consumer loyalty in wine and label recognition is way lower than most people think. You can change consumer habits as consumers are changing due to the current environment. If you want to stay current, it's important to stay flexible. In some of what is happening in the Club Channel and the online retailers, watch what other retailers are doing, including Whole Foods and Amazon. Lastly, be thoughtful. Inclusive and welcome diversity of thought to evolve culture within your companies that will translate genuinely to consumers in your marketplace. Data shows that younger generations are starting to consume wine, and that's something to celebrate. But these generations that are savvy to disingenuous marketing and traditional advertising, be genuine to your story, inclusive and honest, and you'll have a better chance of attracting them than if you target them specifically. Thank you.
Hello, my name is Stephen Rannekleiv, Global Strategist for Beverages here at Rabobank. And I'd like to talk today a little bit about what it's going to take for wine companies to be successful moving forward. If you look back at 2020, you might say to be successful moving forward, you're going to either need to focus on e-commerce or focus on the off-premise, and that might be part of it. But when I think of what it's going to take to be successful moving forward, the word that comes to my mind is resiliency. Companies that will survive and thrive will be those that can adapt quickly to change, those that have resiliency built into their corporate culture. In our most recent Global Wine Quarterly report, we took a look at some of the changes happening at Viña Conchitoro, the Chilean wine company. And, this past year, when most other wineries were seeing their results under pressure, Viña Conchitoro, they saw their both revenue and operating margins really take off in a robust way. And it's an interesting story. And if you look back at Conchitoro, it's a company known for exporting inexpensive Chilean wines around the world. They do it well. But a few years ago, they realized that, premiumization in their key markets, the weakening British pound, they realized that they were going to have to shift their portfolio up market, and just adding a few premium products wasn't going to do it. They really needed to revamp their company from top to bottom. And they started by streamlining operations, completely revamping their product portfolio, bringing in a new sales and marketing team with a completely different skill set that they needed, right? It was a revamp from top to bottom. And you might ask yourself, well, what does that have to do with me? That's a Chilean wine company going premium. I'm a California wine company. I already target the premium end of the market. But at its core, this is not a story of a Chilean wine company shifting to more premium. This is a story of a company building in resiliency into its corporate culture. And, some of the drivers of change may be different from what you're facing today, but think about some of the questions that they had to confront to do this, right? Am I targeting the right market? Do I have the right products and brands in place to do that? Do I have the right skill sets internally to really effectively tap into those markets? And that's a tough one. And while these may seem like very, very basic questions to be asking yourself, asking them can sometimes, confronting them can sometimes force us to make very difficult decisions. And I think if 2020 has showed us anything, it's that, the market can change very quickly and force us to pivot with very little advance notice. Companies that survive and thrive will be those that really build resiliency into their corporate culture. And if you haven't already done so, I'd invite you to go back and read our Global Wine Quarterly and look at what happened at Conchitoro, not with a view of understanding what a Chilean wine company did to shift more premium, but look at how a company built resiliency into its corporate culture. With that, I wish you all the best and take care, and wish you all the best for 2021.
So my prediction for 2021 is we're going to see a significant reassessment and reform effort where alcohol distribution is seen. Let me start by saying this. I think 2021 is going to continue to be a year of disruption as a result of COVID-19. However, I think we're also going to see a rapid increase in both consumer and business confidence, primarily as a result of the rollout of the vaccines in the first quarter of 2021. It's this increased business confidence, however, that's going to spur the alcohol industry to pursue reforms. Now, these reform proposals will be reactions to trends that are both longstanding as well as highlighted during the pandemic. So now for wineries and their trade representatives, the question is going to be the extent to which they want to take part in pushing these reform proposals forward. They're also going to have to make an effort to try to determine what the impact of a successful reform effort will be. So with that said, among the most important reform efforts that are definitely going to happen in 2021 are first, expanded DTC shipping rights for distillers and brewers. Second, we're also going to see an effort to expand beer, spear, and beer, wine, and spirit self-distribution rights in 2021. And then finally, we're going to see a continued effort for retailers to expand their DTC shipping rights. Now, in every case, it's going to be both the courts and the state legislatures where the push will be made for this increased market access for producers and retailers. So just to reiterate, distillers and brewers are likely to focus on expanding their DTC shipping rights as well as their self-distribution rights. And retailers will work on expanding their DTC shipping rights. But there will be a certain contingent of retailers who will also support expanded self-distribution rights for producers because that just gives them access to a larger array of products, and that's good for them. Now, we're also going to see pushback on this effort from the middle tier as well as from a large swath of retailers across the country who believe this is just expanded competition and bad for them. But honestly, I just don't see there being any stopping this effort to reform channel and market access for producers and retailers. So 2021 is going to be an important year for reform of distribution of alcohol. And so with that, happy holidays, happy new year, and let's hope its happy days are here again in 2021.
Hey, it's Zach Kamphuis from Commerce 7. Commerce 7, we power direct-to-consumer sales for over 420 wineries around the world. And I can tell you, looking at our aggregate data, we know that the number one thing wineries need to be doing in 2021 to grow their e-commerce sales is to utilize personalization. The wine industry faced a lot of challenges this year. There's also a lot of opportunity, though. E-commerce sales are through the roof. A lot of consumers went out. They bought wine online for the first time this year. And for many consumers, that preference to buy directly online is going to stick. The number one thing wineries need to do in 2021 to capitalize on this opportunity and grow their e-commerce sales is to utilize personalization. When a consumer is shopping on your site, you need to personalize the content and the products that they see on your site based on their unique relationship with your brand. Right? There's a lot of benefits to doing this. There's a lot of benefits to personalizing online. When you offer your site visitors personalized content and personalized product recommendations, you give them a better experience. Personalized content and personalized products are a lot more relevant to a specific visitor. And when you're showcasing more relevant content, you're creating a better experience, you're driving revenue, and you're going to increase your retention. Nearly half of all shoppers surveyed have said that they've purchased a product they didn't initially intend to buy just based off a personalized recommendation from a brand. 44% of consumers said they'll likely become repeat buyers after a personalized shopping experience with a brand, and 80% of shoppers are more likely to buy from a company that offers personalized experiences. You're likely already personalizing in your tasting room. If I were to come into your winery and tell you I was a club member, you wouldn't tell me the story of the brand because I would already know it. You wouldn't try to get me to sign up for your club, and I'd already be a member. More likely, you'd personalize my experience in there and you'd tell me about the club-only events coming up and what I can expect in my next package. But if I were to come into your winery, if I were to come into your tasting room and tell you that I like full-bodied reds, you wouldn't recommend I try your Chardonnay. It'd make a lot more sense to personalize what you recommend to me and ask me to try your new Cabernet. So personalization is doing the same thing just on your website. Our winery clients who utilize personalization, they see a ton of great benefits from it. Only 15% of our clients are utilizing personalization today, but these are typically the top performing wineries on our platform. And that's because personalized pages on Commerce 7, they drive 6 times more add to cart clicks than standardized product pages on our platform. That means our clients who have pages like this, they get 6 times more add to cart clicks than our clients who utilize generic product pages like this. Implementing personalization doesn't have to be hard. If you're interested in utilizing personalization online, email info@commerce7.com and our team will be happy to help you get started.
My bold prediction in 2021 is that we're going to see a rapid adoption by retailers in the independent beverage alcohol space of next generation digital technology and digital strategies that are going to change the way they do business with consumers. Today's adoption of digital has been superficial. It solved problems like setting up curbside or setting up e-commerce and changing transactions, but it hasn't changed the way that consumers and retailers and brands relate. Next generation technology, next generation strategy is going to be intelligent, and it's going to be consumer oriented. It's going to be about discovery, and it's going to be about relationship building. It's not just going to be about the transaction. In 2019, Claudia Schubert, the Diageo US and Canada president, predicted that her company would change their marketing from 70% traditional and 30% digital to 30% traditional and 70% digital. In fact, that came faster for them. But what they then realized is that doing things the way they've been done in the past doesn't work when it comes to marketing in a digital world, and that being digital is not enough. It means getting local, getting down to what the consumer is thinking and how they engage in discovering new products. And for the local retailer, this is really important because the independent retailer is the source of innovation products, of new products, and helping those brands and those new products cut through the noise is what the next generation of digital technology can do. So if you're a retailer looking to get ahead or to be an influencer in the next wave of beverage alcohol retail, the best thing you can do is to begin to look at what the future holds for digital and how digital marketing and digital technology can change not just the way you sell product to a consumer, but how you actually change the experience that consumer has with your store and how they discover you and how they discover the products you sell. So that's it. My bold prediction is the next generation of digital technology and digital strategy will reshape the way that the brand and the retailer relate to the consumer in beverage alcohol.
I'm Damien Wilson. I'm the Hamill Family Chair of the Wine Business Institute at Sonoma State University, and I'm here as part of the Wine Industry Network to give you a bold prediction on the wine sector for 2021. Now, what sort of bold prediction, you may ask? Well, it's not going to be about orange wines taking over the wine sector. Indeed, it's going to be something far more logical and based on evidence in the marketplace. Specifically, let's welcome the Henrys to the wine sector. Now, who are the Henrys? Well, this image on screen should give you some idea, but let me spell it out specifically. We're not talking about this sort of Henry. That's a Henry that a lot of people are really keen on, but the wine sector specifically is more interested in the high earning, not yet rich or not rich yet group of Henrys. They're the ones who offer the greatest opportunity for the wine sector in 2021. So what is the Henry's arrival going to look like for the wine sector? Well, specifically, they've grown up affluent and more affluent than any former generation in time. And with wine consumption being directly proportionate to income, that offers a great opportunity for the wine sector. Secondly, they're symbolic consumption enthusiasts. That's important to them because it helps express their independence and their preference for one thing over another. Thirdly, they're a values-driven cohort, and that's how they make decisions. So the social conscience and certainly elements like sustainability being a keen part of the wine sector is a watchword of their generation. They have high levels also of accrued debt and high costs of living due to their education costs, the services they demand and appreciate, and also the need to keep up to date with the technology that they experience as part of their day-to-day lives. By now, you should be asking yourself the question, well, Damien, that's just a list of issues. How is that an opportunity? Well, specifically, we're heading towards the pandemic's conclusion. And at the pandemic's conclusion, we've got a situation that we're going to be dealing with economic growth. Maybe not in the short term, but certainly in the long term. And there's going to be a multiplier effect on issues of innovation and enterprise, which are key elements within which the Henrys are highly involved. Wine also is suitable to service consumption, i.e. high levels of service are provided, particularly in the on-premise environment, which is really key to their social interactions. This generation also has everything to prove and the world to save as a key component of their value system. And finally, there's this wealth transition coming from baby boomers through to the Henrys, which wine has a great opportunity to take advantage of. So how does wine attract a Henry? Well, we know that they are a cohort that's comfortable spending either as part of symbolic consumption or as part of their elements that are important to them for their values. Wine has a particular image to them that is consistent with the values that they're trying to express and follow as part of their lifestyle. Also, what we know about is that they exhibit a degree of loyalty to those brands that exhibit their values. And they're also comfortable being promiscuous with regard to the brands that they use until they find something that they like. So what our aim is as the wine sector is to learn how to communicate their way so that we can get more Henrys drinking more wine. The bottom line is wine is set up beautifully, and essentially it's really what I'm referring to is the pandemic achievement. We've seen the great growth in wine.com, both sales and attraction to e-platforms through the appeal of this segment, this cohort. And here is an example of an online tasting. And you can see here, you've got examples of people who do not fit the stereotype of the old wine drinker with a wine book reference next to them. This is a group of people enjoying and sharing a moment together. Delivery services offer the service provided for the Henry, which is exactly what we're looking for. And looking at, from the Nielsen data, the great change in the cohort, the area that they're interested in, not just in table wine, wine in general, different categories of wine, and mixed wines, which really cater to their interests. And the bottom line is, if we don't cater to their interests, then some other category, like hard seltzer, is going to. So our goal in the wine sector, my bold prediction for 2021, is to take advantage of the Henry.
Yeah, so looking at 2021, it is without question, e-commerce is going to be an incredibly more important channel for wineries than it has been in the past. Immediately after stay-at-home orders in April, May, and June on the WineDirect platform, we observed a 400% to 600% increase in e-commerce sales compared to the previous period. Now, that has returned kind of to the mean a little bit, but we're still 2 to 3 times at a 2 to 3 times higher rate of e-commerce sales on our platform than going into this COVID period. So what does that mean? Now that we're 6, 8, 9 months into this, it means that these e-commerce customers, these new preferences that were set are sticking around. So we have brand new buyers that have learned to buy directly from wineries. Now, there's an impact to that. You can't just kind of claim victory because those consumers have different preferences than the traditional buyers. So first and foremost, those consumers really want fast and shipping included. That is table stakes now for wineries. It needs to be factored into marketing budgets, but consumers are not accustomed to paying for shipping, and we see a drastic difference between the success of wineries that have shipping included programs versus full charge for shipping e-commerce programs. Drastic difference. So that's number one. Number two, these consumers have higher expectations on communication from the winery, so accessibility. So they want more things like chat, frequent updates about shipments, accurate ship dates. These are expectations that were set by companies like Amazon, Shopify, and many other giants of e-commerce. And just because we're small to medium wineries for the most part doesn't mean we get it passed. So that's number two. And number three is an emerging trend that we didn't expect that many wineries are going to have to make a change to be ready for. And that is consumers are just as interested in who they're buying from as what they're buying. So consumers want to make sure that the businesses that they're purchasing from align with their own principles. So one thing that happened during lockdown in the COVID period was consumers look to buy from small to medium businesses. That's great for wineries, right? Because we are all makers. We're all small to medium businesses for the most part. So that's really good. But they also were scrutinizing who they're buying from. So they want to know, for example, what are you doing to offset the environmental impact of your e-commerce program? And that's a new question that many wineries aren't going to be ready to answer right off the top of their head. Now, sure, we have lots of people that are committed to sustainable growth in their business, but does that trickle down to your e-commerce program? And this just could mean simple things like, are you offsetting the carbon impact of your direct-to-consumer shipments? So just to recap, consumers are coming. E-commerce is here to stay. Those consumers have higher expectations than they did just 1 year ago. Fast, free shipping, really good communication. And then 3, consumers want to know who they're buying from. In particular, what are you doing to offset the environmental impact of your direct consumer shipping program? So that's it. Some new things to think about. Not necessarily bold predictions, but accelerations of trends that were there that just simply aren't going away.
2020 has been a challenging year for beverage producers. It hasn't been easy to pivot our entire business models to adjust to the ever-changing socio-political conditions. And while there is some relief on the horizon, it will take years for us to get back to some semblance of normal, especially when it comes to on-premise sales. There are tough times ahead. Over the past year, most of us have discovered direct-to-consumer sales has become even more important than usual. This will definitely remain the case in 2021. The good news is that 2021 will offer beverage companies new opportunities to elevate their brands. One area of potential growth is content marketing. Content marketing is just a succinct way of describing all those marketing activities that help you tell your story. As global competition continues to swell, beverage producers need to step it up if they want to compete. They need to differentiate themselves, and the best way to do that is by communicating their unique story. No one has a story quite like yours. And don't tell me that you are family-owned, small batch, handcrafted, made in the vineyard, and so on. There is more to you than that. Content marketing allows you to tell your story in your own way over time. Don't worry about nailing it the first time. You build your story over time through sharing events in your life, special occurrences, business as usual, etc. You have a lot to say, you just may not know it yet. So, what's the strategy? First, get your website into tip-top shape. Many businesses build their website and forget about it. It's a missed opportunity since it's the one digital platform that you completely own. You are masters of your own destiny there. Use it as the hub in your communications network. Drive all your traffic there since that is where you are actually selling your product. Second, consider what you have to say. Sometimes we're so close to it ourselves that we can't see the forest for the trees. So, get some help. Ask your family, your friends, your neighbors, whoever can help you. Or maybe you hire a professional. Marketing, not psychological. Although some people I know could use both. Come up with some key message points that you will use whenever you generate content. Third, consider the format for your content. Written content is great, but don't forget about photos, videos, and graphics. Don't put all your eggs in one basket. Use multiple formats and multiple channels to get the word out. Finally, make sure you are sharing your content everywhere you can. Facebook, LinkedIn, Twitter, Instagram, YouTube, email, newspapers, magazines, etc. And remember to link back to your home base, your website, to drive traffic there. Okay, so why? Why is content important? Well, I already shared the need to tell your own story. In addition, it's important to the search engines, to search engine optimization. Google and Bing give higher ranks to those sites that are more active and have more to say. A constant stream of content signals to the search engines that they need to rank you higher. And the most important reason for content marketing is that it's a vehicle to engage with your customers. It gives them a window into your world. Today's consumers like to spend their money with companies that share their values. The only way they will know about you, or on more than just a one-to-one basis, is if you let them in. So that's it. Focus some of your efforts on content, and the long-run dividends will pay off. Good luck. Feel free to reach out to me at mike@balzac.com with any questions or needs for help. Have a wonderful holiday, and hopefully we'll get to meet face-to-face next year. Cheers.